Hello everyone and welcome to today's morning markets. So today we're going to focus in on Donald Trump and recent social media reports of tariffs. Okay, so what's the history behind this? So we all know that in the run-up to the race for presidency, Donald Trump discussed adding tariffs to different foreign goods that were being imported into the US. So a particular focus there on the relationship between US and China. Now, why is he doing that? He's doing that, A, to encourage US consumers to buy more US made products, but B, also to penalize those foreign companies that are sending their products into the US for US buyers. So imagine if you're, say, a Chinese company or a European company where a large amount of your book is sold into the US. And obviously if Trump adds tariffs to that, that is going to hurt your company overall. And potentially there may be a US company that could do the same thing as you. So really the whole of this is a form of US protectionism overall. But what did we see yesterday into last night? So Trump announced tariffs of 10%, additional 10% on Chinese goods imported into the US, and tariffs of 25% on Canadian and Mexican goods imported into the US. And that came on his social media platform, which is called Truth Social. Now within that, he talks about these executive orders coming in on January the 20th. So why is he focusing on January the 20th? So that is the date that Donald Trump officially becomes president within the US. So within that, that is when he's inaugurated as the next US president overall. Now, really, we've talked about at a high level the political side of things, but what does that mean from an investment perspective? What does that mean for your money overall? Now, we saw firstly a 10% tariff on Chinese goods. That's actually lower than what a lot of investors were expecting. So investors were expecting something in the 20 to 30% range overall. What does that mean? Well, it means that China could cut interest rates. It could increase fiscal stimulus. It could actually moderately depreciate its currency in order to counter the economic impact of increased duties. If we actually look at trade data, what can you see? Well, you can see that Mexico is the largest trading partner of the US, followed by Canada, and then followed by China overall. But I think what's really important here is that the US and China have what is a very important economic and commercial relationship overall. Now, how did asset markets move? In general, developed market equities actually provided slightly positive returns yesterday, but as we've opened this morning, developed market equities are generally down. Within Chinese equities, what you saw is just a very marginal drop there. I think they were down around about 0.12% on the day overall. If we look at the big moves, you saw a big move in US government bonds. So you saw an increase in prices in US government bonds, and that's all to do with Trump's new secretary. So the Treasury Secretary, a guy called Scott Bessent. He's seen by investors as being very stable. He's got a hedge fund background. One of the key things that he said initially is that Trump's policies he doesn't believe are inflationary. So that's everything from me. I hope you enjoyed today's morning markets, and I look forward to speaking to you soon. Thank you.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value, and you may get back less than you invest.